Hey there, I'm Mike Hockett, and these are your latest ID Quick Hits. Grainger reported its second quarter financial results Wednesday morning, showing more big sales and profit gains for the MRO products giant. We posted the key sales and profit numbers on the ID website and newsletter, but here, let's take a deeper dive into Grainger's Q2 performance and other details it provided. The company's numbers show that it had Q2 sales of $2.94 billion, up from Q1's $2.8 billion and up 9.4% year over year. Grainger's adjusted net profit of $237 million dwarfed the $98 million it had a year earlier, while adjusted net profit was up 54%. Grainger's adjusted gross profit margin dipped 100 basis points to 38.9%, while it improved its operating expense margin by 240 points to 26.3%. As we reported on much over the last year, Grainger enacted a new pricing strategy at the start of 2017, which it accelerated in Q2 of last year. At the time that it debuted, a lot of analysts were skeptical of it, wondering if Grainger would be able to boost its sales volume enough to make up for smaller profit margins on each product. Based on Grainger's financial numbers so far through 2018, it appears the answer to that question is yes. Looking at Grainger's latest 3 quarters, large customer volume increased 8% in Q4 of last year, increased 7% in Q1 of 2018, and jumped 9% in Q2. The gains are far more eye-opening for medium-sized customers, which Grainger said was the biggest target of the pricing adjustments. Sales to medium customers grew 26% in Q4 of last year, grew 30% in Q1, and grew 29% this past Q2. Those figures have Grainger feeling pretty confident as the company raised the lower end of its previous 2018 full-year sales outlook from $10.9 billion to an even $11 billion, with the high end at $11.3 billion. Grainger had 2017 full-year sales of $10.1 billion. Shareholders are also feeling optimistic. Just look at Grainger's stock price over the last 18 months. When the company announced this new pricing initiative in early 2017, its stock fell from $255 in early February to as low as $155 at the end of that August. But it's been climbing fast ever since. Grainger opened 2018 at $235 on its stock price and it topped $300 on May 10th and seemed to level off around there until the company's Q2 report was released on Wednesday. At the time of this recording on Wednesday afternoon, Grainger's stock was up 11.5% to $340, which was the biggest one-day price increase gainer on the New York Stock Exchange. Looking at Grainger's business segments in Q2, its US sales increased 8.8% year over year, driven by a 10 percentage point increase in volume. In Canada, sales decreased another 6.9%, driven by a 20-point decrease in volume as the company continues to restructure its business there. Meanwhile, Grainger's other business segment is booming, with sales up 18%, of which 14 points were due to volume. Finally, Grainger continued to trim its global branch count in Q2, as it has for the past several years. After closing 56 branches in Q4 of 2017 and 22 branches in Q1 of this year, Grainger closed another 34 branches in Q2. 30 of those closings were in Canada, and only 1 was in the US. The company's global branch count was 449 at the end of June, with 284 of those in the US, 44 in Canada, and 121 in other businesses. The company has 33 distribution centers, with 17 in the US, 7 in Canada, and 9 in other businesses. Those are your latest ID Quick Hits. Keep up with all the latest industrial distribution market news at indist.com. Thanks for watching.